we are on the brink of witnessing the approval of not one, not two, but a whopping 11 spot Bitcoin ETFs. I mean, talk about a milestone. And guess what? That's all happening this week. Now, picture this. We're standing at the edge of a financial revolution with the potential for hundreds of millions, if not billions of dollars flowing into Bitcoin over the next few years. This could be the moment when Bitcoin transcends its niche status and becomes a household name, something our parents and grandparents can grasp, buy, and include in their portfolios. What really blows our mind is that for the first time in history, institutions are giving Bitcoin a nod of approval. It's like the big players are finally saying, yeah, we want a piece of that too. If all goes as predicted, Bitcoin might just become a staple in the traditional financial world by the end of 2024. I had to share this with you, especially because you're into Bitcoin. The crypto world is about to witness a crucial moment as 14 different money managers and ETF issuers await approval to launch their spot Bitcoin ETFs. It's like the Olympics for crypto finance. Now, you might be wondering, how does this affect me? Well, the next steps involve exchanges and issuers getting their paperwork in order. We're talking about expense ratios, and who knows, these ETFs could be free or come with a price tag. The details are still up in the air, and it's like waiting for the curtain to rise on a blockbuster movie. Once the paperwork is sorted, it's all about getting the green light from the SEC. Will they give a specific date for trading to begin, or will it be a free-for-all? It's a bit of a horse race, and we might see some of these ETFs hitting the market sooner than we think. Now, let's talk demand. Remember when the first gold ETF hit the scene in 2004? That sparked a surge in demand, but I can't help but wonder where the demand for Bitcoin ETFs will come from. Is it the average Joe, institutional investors, or a mix of both? Our guts say there's going to be some initial excitement, but the real test is how much demand we'll see in the long run. We're not just talking about chump change here. Grayscale's GBTC alone already boasts $25 billion in assets. So, when the dust settles and we look back in a few weeks or months, it'll be fascinating to see how much new demand is poured in. One thing's for sure though, this isn't just about traders trying to catch the latest Bitcoin wave. We are entering a phase where financial advisors might start allocating a slice of their portfolios to Bitcoin. Imagine that. Bitcoin becoming a mainstream asset in portfolio models. It's a wild ride, and we wanted to make sure you're strapped in for the journey. Let's see where this historic moment takes us in the world of crypto. Now let's dive into some fascinating background on this whole Bitcoin ETF approval saga. You won't believe the twists and turns that have brought us to this moment. Gary Gensler, the head honcho at the SEC, has been a bit of a roadblock in the past, pushing back on the idea of a Bitcoin ETF. However, the tides turned after a significant legal showdown against Grayscale towards the end of the last year, and now, boom, we are on the verge of potential approval for not one, but a bunch of Bitcoin ETFs. Now, hold on. It's not just the SEC's show here. Even Jay Clayton, the former chair of the SEC, has shared some insights into the SEC's mindset. There are 3 key things the SEC wants to nail down before giving the green light. First off, disclosure has to be crystal clear. They want people to know exactly what they're getting into when they invest in these ETFs. Then, there's the underlying trading market. It has to be top-notch, efficient, and free from any shady dealings. The SEC doesn't want any manipulation or questionable behavior messing things up. Lastly, and this is a biggie, the asset infrastructure needs to be solid. And I mean the whole shebang. From custody to redemption, authorized participants, arbitrage, it all has to run like a well-oiled machine. Now, back when Jay Clayton was chair of the SEC, he had his reservations about the Bitcoin trading market. But now that it seems like we've come a long way and those concerns are being addressed, it's like Bitcoin is growing up. Now, about the whole investment angle. We're no financial gurus, but we can tell you this. Bitcoin is like that wild horse in the financial world. It's speculative, it's volatile, and it's not for the faint of heart. No reputable advisor would suggest throwing all your hard-earned cash into such a risky ride. But here's the kicker. Someone out there is bound to tout Bitcoin as a golden goose for your retirement funds. It's the classic tale of risk and reward. The thing is, the price of Bitcoin is like a roller coaster on steroids. After approval, we might see a rally, but brace yourself for some serious ups and downs. And here's the real kicker. Getting approval is just the start, not the finish line. We're entering uncharted territory, and the real test will be how much demand there is, which issuer comes out on top, and the whole shebang of decision making that goes into this crypto spectacle. Now, the big question on everyone's mind is whether the cheapest ETF is going to be the winner in this crypto showdown. It's like the battle of the fees, and let me tell you, the cheapest one is definitely going to have a head start. Invesco and Galaxy are even going the extra mile by waiving the fee for the first 6 months. A bit of a marketing gimmick, really, if you ask me. Most advisors, though, don't fall for these fee waivers. But here's the twist. If one of the heavyweights like BlackRock or Fidelity comes out with the cheapest option, that's a tough act to compete against. However, what's even more interesting is the initial volume in the first couple of weeks. It's like the early days of a blockbuster movie. Whoever pulls in the crowd first has a better shot at stealing the show. And it's not just about the cost, it's about who it's the market running. Remember the derivatives market? If that starts buzzing around the ETF, especially with live options, it becomes a game changer. We've seen it with gold ETFs before. Once options hit the scene, good luck trying to shake things up. Now let's talk about a fundamental flaw in this whole Bitcoin ETF adoption saga. Brace yourself for this one. You won't be able to buy the dip or sell if Bitcoin goes on a wild ride with these ETFs. Why, you might ask? Because when the stock market senses a rapid price drop or increase, it hits the brake and halts trading. Imagine you're ready to make a move and suddenly, you're stuck in financial traffic. That's the deal with Bitcoin ETFs. Owning actual Bitcoin might be the smarter move here. Let me explain. If the S&P 500 drops 7%, that's a 15-minute trading halt. Hit 13% and it's another 15-minute break. If it goes crazy at 20%, the market shuts down for the day. Now, imagine this in the context of Bitcoin. Way more volatile than GameStop. If there's a dip or a country decides to print money to jump on the Bitcoin bandwagon, your buy and sell buttons for the ETF might just decide to take a coffee break. This week is going to be monumental, Cryptonauts, and I promise to keep you in the loop. We're dropping a video every day, keeping you on the pulse of the crypto world. Hit subscribe and let's ride this roller coaster together.